Hi, and welcome to Smart Beach Investors weekly real estate update for Florida's Emerald Coast. This is where we take a look at the vital market statistics, looking for trends and anything that will tell us where prices are headed in the short term and even the long term. Then we offer a little bit of analysis that will help you determine whether you should buy, sell, or hold your property. All right? That's what we do. I'm John Moran. I am the CEO and founder of Keller Williams Realty's At the Beach team and Smart Beach Investor. And that's what we're going to do here. So let's go ahead and get started. Let's talk about what's going on in the real estate market here on Florida's Emerald Coast. Oh my, what is going on? Not much is what is going on. It's really tight right now. It's just one of those things where not a lot of transactions are happening. And yeah, it's November, and this is normal for November, no doubt about it. It's just a little more normal than usual is all. But yeah, it's tight right now, and that's interesting for sure. That is an interesting thing. But the main determiner, I think, of it all is supply. When supply is high and there's a lot to choose from, it's really hard to hold prices, and you generally see dropping prices. But when supply is low, it's really hard to see prices come down. So that's one of the main things we're going to look at. We're going to look at supply and what's going on with that. All right. And we're going to look at mortgage rates. We'll look at prices and things like that. But let's start with supply. Let's just see what that's going to tell us about what to expect as we move into 2024. Supply. That's what it all comes down to, right? Supply. If we got a lot of it, prices will probably come down. If we don't have a lot of supply, prices are probably heading up. So let's take a look and find out what we got. Let's start with Destin Condos. This is Fort Walton Beach, Destin Miramar Beach. Last year, 2,903 properties on the market came on the market. So far this year, and these are all year to date on both last year and this year, 2,338. That is a decline of 19.5%, almost 20% down in the number of condos new to the market this year. Going to be very difficult under those conditions to see prices go down. All right. 38 condos. Let's take a look at those. Last year, 496. This year, 391. Again, that's a 21% drop in the number of properties for sale. A decline in supply. Going to be very difficult if you're expecting prices to drop. Panama City Beach, what are they doing? Well, 2196 last year, 1979 this year. That's almost a 10% drop in the number of properties for sale. Same story. It's going to be difficult to expect price drops there because the inventory is so tight. That's the condos. How about houses? Destin houses. Last year, 1,122. This year, 971. That's a drop of 13.5%. It's tough. That's going to be tough if you're expecting price drops. 38 houses, 1,679 last year, 1,551 this year. Again, 7.5% drop in the number of properties for sale. That's a tightening of supply. Panama City Beach houses, last year, 1,492. This year, 1,316. It's 11.8% drop in the number of properties that buyers have to choose from. It's going to make it very difficult, folks, if you're wanting prices to drop. So, yeah. I would not look for a ton of price drop. We could see some softening for sure, but I would not look for a ton of price drop here in the next little while. But let's see. Let's look at prices and what is happening. Prices year over year, Destin Homes. Median sold price last year, $1,250,000. This year, oh, look at this, $986,500. That is a decline in price year over year, even though inventory went down. That's a minus 6% year over year. That's something, isn't it? How about median list price? $1,250,000 for a Destin home last year, $1,220,000 this year. Again, that's a almost 0.5% drop. Not a ton, but the fact that it's down when inventory is down is that goes against the grain. I wonder if that's going to hold up. That's crazy. Let's see if it holds up with the condos. Destin condos last year, 5.25 sold price. This year, 570. It's up, all right? 8.6%. Okay, that makes more sense. The houses, that's going against the grain. That can happen, right? Nothing's written in stone. That can happen. But the condos are falling in line. Low inventory means higher prices. How about list price? 568.5 last year, okay? 574.8 this year. Not a ton different, 1.1%. It's pretty flat, but it's not down. So yeah. Like we said, not hugely up or hugely down. That's pretty flat, and that makes sense. How about 30A? Is that going to follow the same suit? 30A home prices last year over this year. Let's take a look and see what we got here. Okay, 1.5 last year, 1,615,000 this year. That's a 7.7% up. Okay, that's as expected. Median list price, 1,875,1 last year. This year, 1,899,000 up again, 2.3%. Not a ton, certainly not a ton, but it is up. Condos, how about condos? 38 condos. Last year, 825. Okay, this year, 965. That's a big jump. That's a 17% jump up. That's pretty big. Yeah, that's the supply showing its head right there, or lack of supply. Median list price, 865 last year, 975 this year, 12.7%. That's a healthy jump as well. So yeah, homes and condos on 30A have jumped up in price. Pretty healthy, 7.7%, and then the list prices are right there too. So yeah, supply is having an impact on 30A homes and condos. Panama City, we're gonna expect the same thing in Panama City. Let's take a look. Hey, Panama City, what are we doing in Panama City? Houses, 504,162 last year. Okay, 515 this year, 2.1% up. Okay, all right, that makes sense based on our supply situation. List price, 550 for a house in Panama City Beach, 554,949. That's a 0.9%, less than 1%. I would call that flat. How about the condos? Condos last year were 4.25. This year, 430, up 1.2. Again, very shallow, flat. List price is 449.9 last year, 449.850, $50 difference. That's a no change. All right, that's a statistical no change. All right, so it's very flat in Panama City. That's pretty interesting, right? Even though supply is tightened up there dramatically, or somewhat at least, we're seeing a very soft change in prices. They're not jumping up. They're not dropping, but they're not jumping up either. So I would look for more of that with regard to prices in Destin, on 30A, Panama City, condos and houses. We're gonna have to watch it close because that supply is still a thing. It's the elephant in the room. It's gonna have a massive impact for sure. But we're probably not going to see a fall off of prices like we did back in the day. And quite simply, I remember back then, I'll talk about that real quick. Back in the day when prices dropped so far during the subprime mortgage meltdown, we saw prices lose over 60% of their value. Here's the significant difference, guys. Back then, there was massive amount of inventory, supply. There was massive. These developers were coming out of the ground, and these condos were getting their COs, these big hundreds of unit condos, Aerial Dunes 1 and 2, Azure out there on Okaloosa Island, Waterscape. There were so many of these properties that were coming out of the ground and getting their COs, and the developers were getting stuck with these properties as people were trying to get out of them. Foreclosures, short sales, all those things ensued, and that just forced the prices down. Now, even though we had that big run up and we're seeing a massive fall off in number of transactions, we still don't have supply. Like we've talked about, there's just not enough supply. And will we see foreclosures and short sales? I don't see that. I don't understand how that can even happen when so many people have such low interest rates on their mortgage. There's a ton of equity in these low mortgage rates. So I can't imagine that's going to lead to a lot of short sales and foreclosures, which are necessary to have a crash in prices. We'll probably have a softening of prices, all right? We might have some jagged edges on a curve type of thing in the short term. But yeah, I don't see any massive fall off in price. But let's take a look at some of the other things that we watch that are great indicators. Mortgage rates. Let's take a look at mortgage rates. All right, mortgage rates. Look at this thing. Look at these mortgage rates over time. This goes back. This is the Federal Reserve Bank in St. Louis puts this out. Going back to the 70s. Look how it went from just over 7 to where it's now just over 7. That line over time. So it's pretty crazy. And if you look at it, back in the 70s, we saw rates go from 7 and 6 all the way up to 19%. Okay, and that was Paul Volcker, chairman of the Fed back then, trying to beat inflation. He had to raise the rates so high, the mortgage rates went to over 19%. And then they finally broke, and we saw mortgage rates start to come down. And they carried that downward trajectory all the way into 2021, where we had a record low, 2% mortgage rates. And a ton of folks in that period of time between 2015 and 2021 refied their mortgage. And so they're in at these incredibly low rates. A lot of people call it golden handcuffs where they can't even move, okay? And there is some sense and feeling of that for sure. But since 2021, Jerome Powell, the current chairman of the Fed, has raised the mortgage or the federal funds rates, which impacts the mortgage rates, a record number of times and a record clip. And they've gone from 2 to now we're sniffing 8, and they could go higher. They could go higher. And if they go higher, it's going to make it harder for buyers to even afford to buy. Okay. So watch that. And a big thing, we talked about it last week, a big thing is what's going on in the Middle East. If that ignites in a full-scale war, and we have all these Middle Eastern oil-producing countries that turn off their spigots because of the war, and we got Russia and their oil spigots getting turned off, and China and Taiwan, oh my word, we got a lot going on, right? Got a lot going on. If any of that happens, you're going to see inflation continue to this upward trajectory, and that's going to be a thing. It's going to be a thing. So in the short term, I wouldn't look for a lot of relief out of mortgage rates. I think over the long haul, probably, maybe, but in the short term, don't look for that. Matter of fact, let's talk about the short term. I've got some things right here. Look at this graphic. This is perfect, right? The road we're on is a winding road. The longer the road, the more turns and curves and switchbacks and all the stuff that happens. It's a natural occurrence whenever you're in an investing environment over long term, right? And right now we are in a curvy part of the road. It's a curvy part of the road. We've got what? Wars going on. Oh my word with the wars. Inflation, what is going on with that? If you've been to the grocery store, it's expensive. Everything's expensive. You go to a restaurant, you go to buy something, I don't know. They're saying inflation's under control. Out of control in my world still. There's a lot of stuff that's just crazy pricey right now. High mortgage rates. Yeah, we got those. And all these other short-term things. People working from home, right? Going to school from home, doing everything from home online. So I don't know, does that create demand? Is that what's going on there? These are all short-term issues though, that are going to cause prices to go up and down quickly and change quickly. But as long as you're going up over time, which is the long haul, but in the short haul, you can get dizzy in a hurry. So the short haul is going to be very problematic in the next, I don't know, I'd probably say 5 years or less. Be very, very careful. If you're not in it for 5 years or longer, this thing's you're gonna go invest in Rolaids or Tums because it's gonna drive you crazy. Or get out, start running, get out now, okay? That's the short term. Long term, let's take a look at that real quick. Let's talk about long-term outlook for Florida real estate-wise. I am massively bullish on what's going to happen with Florida real estate-wise over the long haul. I'm a buyer. Buy. As long as it's cash flow positive and the numbers work, right? Don't go too crazy. But I'm a buyer long-term. In why? Because everybody's coming here, okay? We have great weather. All right. We have the ocean, we have the beaches, we have the weather, we got all that. And there's very little room. Florida is built. All right. There is some room, but not a ton. Okay. Texas, you can go forever. In the Midwest, you can go forever. But in Florida, there's no forever. You run into the water pretty quick, or you run into Georgia or Alabama or Mississippi pretty quick. Right? So there's just not enough room, and people are coming here, right? The baby boomers, they're aging out of their work. They're retiring and they're moving to Florida to have fun, and they're coming in droves. Behind them, Gen Xers are coming, and millennials, this big, massive wave are coming through. Take a look at this. Take a look at this expectation of the long-term forecast for population in Florida. It shows in 2030, 2040, massive growth in population here. And these folks are going to need homes. They're going to need places to live, and that's going to drive prices up. Okay? And I think people are going to continue to vacation. I think they're going to continue to come to the beach on that vacation. And I think they're going to come, and we're going to see over time the price of our properties here at the beach and our rentals just continue to climb. So long term, absolutely bullish on what is happening here in Florida with real estate. Okay? So then the question becomes is, what on earth do you do? Here's what you do. Matter of fact, I would say it's pretty easy what you do. If you're a short-time player, if you're in it for just 5 years or less, I would run. And run fast. We don't know. One thing we do know is the short, near future is going to be rough. It's going to be up, down, jaggy, weird things based on geopolitics, based on a bunch of stuff. You're going to have weird things happening with prices in the short term. So run. I would sell yesterday if you can. All right, but you can't sell yesterday. But my point is, sell sooner than later if you're not in it for 5 years or longer. All right, if you're in it for 5 years or longer, though, yeah, smiles. Right? We love it. Just tie a knot, sit back, whatever you got to do, and watch what's going on. Okay, because I believe over the long haul, only good news for Florida real estate. Short haul, not so much. Okay, so do this. Send an email, info@smartbeachinvestor.com. If you have any questions, if you're trying to decide, do I stay, right? Do I sell? Do I buy? Maybe I buy. I'm a buyer. I don't know. It depends. It depends on what your financial goals are. Send an email, info@smartbeachinvestor.com. This is what we do. We help people max out their position as buyers, holders, or sellers. Okay, we're good at this. All right. So send us an email. We can help you out and help you understand what's going on and give you some confidence. Okay. So that is what is happening this week in real estate on Florida's Emerald Coast. Like I said, not a ton, but enough. And in what we expect going forward. Tune in next week. It's going to be different. Always is. Until then, though, have a great week.